Manipulation is the one thing that took me from a struggling trader to a profitable trader. In today's video, by the end of this video, I promise that you will understand how to use manipulation. And if you're new here, my goal is to help you become a profitable trader. So let's get it. Before we get straight into the manipulation, if you're new to the channel, welcome to the channel. And number two, man, make sure you stay to the end of the video. I know it's very difficult sometimes, but I got you. I'm gonna take care of you. My goal is to turn you from a beginner trader to a profitable trader in as fast as time as possible. It's not a cakewalk, but I got you. So make sure you stay to the end of the video because I tie everything together. I bring all of it into one, show you real examples, and that's what I'm gonna do here while we talk about manipulation. All right, guys, so what is manipulation and how can you spot it out? Let's keep it really simple. Manipulation is simply, if we look here on the charts, it's simply when we actually have price showing one thing and then it does another thing. So if we're looking to sell and then we sweep and then we buy up, or vice versa, we could look to buy, we push up and then we take the lows, right? It's the same exact thing. So let's go over it really quick so I can show you. So exactly what we're looking at here. If we're looking for something that's considered manipulation, we want to see these exact things happen here. We want to have this sweep. Why do we have this sweep? Because these highs, understand that every high in the market represents orders. It represents somebody who got in the market at that point. And once price goes above or below those levels, whatever it is, buy or sell, that is it's potential stop losses there. People who are in the market, broke even, stop losses there. You take that money out and then you immediately see this big rush of sell orders into the market. That is a clear manipulation, sweep of liquidity in the market. When I say sweep of liquidity or manipulation, it is the same exact thing. People say, hey, it's banks, this and that. It's not always banks. It's simply the algorithm gathering orders. So for example, if the algorithm and banks wanted to go lower, they need more people to buy and get in the market. So what they do is show buy signals. Buy, buy, buy. A lot of buyers, breakout traders, trend line traders, whoever get in the market, supply and demand traders, whoever gets in the market, and then it takes all of them out, entering all of those sell orders into the market at once, right? That's where you see those strong moves come from because we swept liquidity first and then the market showed this card. Another example of this is right here where we are buying up the market, we pull back, we reject a little bit, take a high, and then you see an influx of orders get put into the market. Well, all that happened was price came down here, took these Asia lows, took some of these lows in here, tapped into something to the left, took the highs, and then a bunch of money got entered into the market. Really simple. It's a form of manipulation. If we go to the daily on NAS, it's the same exact thing. It happens on every time frame. Well, you got this huge wick. I consider this manipulation because of two reasons, right? You want to see two things happen in the market. You want to see the sweep of the lows. What again, let's reiterate it. Why is that important? The lows or even the highs, because there are orders rested there. There are people who got in the market here. They took this up. Now they're expecting price to just fly. Price came all the way back down, took those stop losses, and then entered the market. So the first thing you want to see is the sweep. The second thing you want to see is a break of supply or demand or structure, whatever you want to consider it. As you can see here, this is a level of supply that got broken. Why could we say this is a level of supply that was broken? Because this level here made a new low in opposed to these lows here. If we looked at this in the background, you will see that it actually took out all of this and also took out this low as well. So that shows a sweep of liquidity in the market on the daily time frame. And look at price today, actually, where I wanted to get in the trade, but it just wasn't clean enough. But I see manipulation and it was perfect. And I know that for the rest of the week, I have a setup potentially that I could look for and work with. And the places right here, we have Asia lows. Right here, we have liquidity in here. Well, in this order, if you trade support resistance, a lot of people look at this level and say, hey, listen, man, this is beautiful rejections, beautiful support resistance. I love it. When price comes back to these levels, I'm going to trade. And today, price came back to this level and then pushed through everything. It actually swept out all of this right here, rejected these levels here, but it took out all these Asia low liquidities, this double bottom liquidity, and then eventually took out the liquidity at the top right here. So it did is two things. It swept lows. And immediately, as soon as it swept those lows, it took the highs, right? It took those highs, as you can see. So now when we come back to this level, what are we expecting to happen and enter in the market? We just map out those levels and we expect price to show that sweep of liquidity. And then we continue because we are bullish and potentially get a even stronger move after we gather the rest of those orders. So if we zoom in here, Again, we are bullish. Price starts to slow down. We want to see manipulation, then get in the market. So price starts to slow down. You see a rejection. You see price pushing lower. It takes what? Asia lows, which is a ton of liquidity there, important liquidity for the day. And then we take the highs. Once we take the highs, we did get a rejection candle. This is a perfect entry for you to get in at midnight price. Put the stops there because this is now a protected low. The most important thing about manipulation is those levels are protected. When you see that sweep of liquidity or manipulation, then you know that that level, as long as that level sweeps and breaks a level of structure or supply and demand, you are now in the protected levels of that point. So this is why we say, hey, we can put our stops at this low right here, protect that low, because we understand that this low should be protected now. Even more so, let's say you weren't comfortable taking that in that trending market, you can map out this level and say, wait, when price comes back to this level, I'm looking to enter, right? Well, again, this is a sweep of liquidity break. We actually get this level down here. We could put our entry there and get right in the market. This is how I use manipulation. Easy money, easy money. You just have to be patient and wait for it. Here's another beautiful example of when banks really want to move price up, where we have, it actually started over here. So we have a sweep right here. Why is that a sweep? Validate why that is a sweep because it took highs and then it did what? Took lows, right? So if we map out all of this action here, we took highs, made new highs, and then we took lows and we took them. Well, price is going to come back to this level somewhere over here as a supply level. We come over here and then we can enter off of that sweep and you can protect your high here or you can protect your highs here, understanding that this is a valid supply mitigation. And then you can target whatever you want to target and get in the market off that manipulation. And then also understanding that this is the most previous supply level. You get in the trade somewhere in this supply level. We push down showing bearishness. Remember what I said, manipulation. The market wants to show one thing while thinking about another thing. We tap into something to the left here and then price flies away. So a lot of people say, well, how would you know that price is going to do this? You don't know. It's the banks. You want to understand, hey, where's my liquidity in the market? Well, I have a bunch of orders rested below these equal lows, these trend line liquidity, whatever. And then I have a bunch of liquidity rested up here in these areas as well. Understand where the market is, understand where your liquidity is, and then you could easily figure out how to utilize manipulation in order to move forward and take control of the markets, right? So this is a very, very simple way to see manipulation in the market and capitalize on it every single day. Here's two simple examples. They'll be really fast on how you're going to use manipulation on a 1 hour time frame and dial everything in together. Now, there will be a second part to this video, which is going to go over liquidity. And after you watch that video on Friday, you're going to watch this one first and you're going to watch the one on Friday. I guarantee you won't need to watch anything else after this. Sweep of liquidity. So if we want to enter sales, and this, or I'm not replaying, but I'm just going to show you. Really, really simple. When you're going into your session, you want to align three things. You want to see that manipulation. You want to see a break of structure, break of supply and demand. You want to align time and make sure you're on a premium and discount of those levels. So for example, we're up here selling. I know it's a very nice supply zone to my left, but we have a beautiful supply level over there that was on a daily time frame. And what we got here in the beginning of our session, as you can see right here at 9 o'clock, 10 o'clock, we have a beautiful sweep of liquidity. Now, when price was here, it wasn't just a sweep. It was just a candle. It was a doji candle. Nothing was happening. But what happened after is the most important. And we got a beautiful break of these lows, break of these lows, break of these lows, right? Which potentially is some form of demand chain in the market. And we broke through all of that. So now I'm looking for a trade because I see my manipulation, which shows I see my manipulation. I see my break of supply and demand. This shows that this is a key level, this is an important level, and we are in the supply zone. And if time aligns, we can get a beautiful trade out of it. So again, all we want to do is map out our levels. Well, what would we like? I would love this level here. And another level I would like is the buy to sell wicks. Well, I love these buy to sell wicks, which price actually tagged into for two reasons. This is a demand zone. These are demand candles. These wicks represent a rejection or a type of resistance in the market. So here we see we just plunged through this level. It was liquidity anyway, Asia lows. But at this level here, also what it gave us was a rejection. It shows wicks, which shows buyers and sellers had to fight. And then the candle after that did what? Just plummeted everything out. That shows the intention of selling orders. Those orders came from that level right there. And also, this is where it started, and this is where the manipulation happened. So worst case scenario, I play the extreme level and we get the perfect entry. But decent scenario, we get the decisional level, which is this one, and we take an entry. I'll get in the trade because I know it's going to the floor. Why do I know it's going to the floor? Because we got a manipulation tactic going on. We have orders being implemented into the market just so we can push everybody out going the opposite way. It's very simple. We get a sweep of liquidity, we break lows, we come back up here, take the entry. Really, really simple. Take it right there. Even if you wanted to, you could put your stops here. Me, I'll probably put it here at the imbalance or right above midnight price around these areas. And then I'm targeting the next form of liquidity, which is probably down here somewhere. And as you can see, we end up getting to that level. Very, very simple. Very, very simple. I know you're like, oh, it's not. No, it's definitely that easy. It is exactly just like that in real time. You just wait to see it because it's very clear and it happens over and over again. Another example is a very, very clean form of manipulation and everything. So exactly what we get here is we got a full area of just consolidation and BS, right? But what we get is a level right here, which sweeps, right? Right? So we would say, hey, listen, if we take out lows, that would be manipulation. Well, we didn't take out anything really important. This is a low. So now I'm going to assume, again, this is liquidity, that this level is going to get swept. As you can see, it gets swept by a hair or a little bit more than that. We end up breaking this level that created this high in the market right here. As you can see, we sweep down there. Remember, we were talking about up here, the buy to sell wicks, where price, we want to see where price showed intention in the market and pushed down. It's not just, oh, well, this is the high and this is the low. No, we want to see where price showed the pressure, right? So if we go back to this point, the pressure came in here and we plummeted through there. Well, this was a level of demand. It could be a flip. So we say flip it to supply. This is a beautiful example of just 9 o'clock, 8 o'clock in the morning. Put your stops up here if you want. Put your stops above midnight price. Me, I would probably put it there if I got in. And I'm targeting the next form of liquidity, which will be all this internal range liquidity, going back to this daily level down here somewhere. And a beautiful, beautiful trade, all because you've seen the manipulation in the market, took the lows, and then the influx of news and everything else helped us out. Let's go to the opposite side of it and look for buys. So example, I took this trade. So we have a level of demand in these parts right here, right? We drag this over. We see that the level got hit. But why is this level important? Why is this level important? Because it did what? It came down, swept both lows, right? Once it swept those lows, it did what? Took out highs in the market. So we took out all of this action here that was supposed to be a form of supply. We end up making a new high and coming up here and tagging into this level here somewhere. So now we know, hey, we're bullish. We hit a daily level. This was a level. We swept these lows. It was manipulation in the market. People thought we were selling off, and we took all those people out. And then we even took out some buyers who got in down here. And all you want to wait for is, again, a sweep, a break, and then we come back, map out our levels, our protected low. We map it out, very, very simple. And then we get in the market. We place our stops wherever we want to put them. If you want to put them here, you want to put them here. I put mine here. I enter as the candle is going down on time. This is the 8 o'clock candle. I would have loved it. I would have targeted the highs and boom. Very, very simple. Why? Because we got manipulation. We got manipulation down here, made new highs in the market. Then we get manipulation of these lows, and then we break immediately. We come back here, and the most important thing was time was aligned. And then as you can see, right at 9 o'clock, we start getting a movement in the market, and we take out everything, and it's a very, very simple trade. This is how you use manipulation. This is very, very simple. All you want to look for is that sweep. Play your daily levels. This is a daily demand zone right here. Price comes back to that level. We make a new high in the market. We even took out some lows that were strong here. Remember, we need orders to get in the market. These are buyers who got in. We took them out. We made new highs, We come back down here. We show a nice rejection. Immediately after that rejection, we take highs. We come back to that level. We enter the market. Easy, plain and simple. This is how you use manipulation. This is how you can make tons of money in these markets day after day after day. This is how you're going to do it.